Welcome to Cold Brew Finance's U.S. End-of-Week Deep Dive, covering market movements across indexes, sectors, stocks, and global markets. The week ending Friday, January 30th, 2026, saw notable shifts throughout these categories. Kicking things off, I'm Max Profit. The S&P 500 index reached a new all-time high, closing at 6,939.2, up 23.40 points. Despite the gain, the Dow 30 index fell 206.24 points, closing at 48,892.48. Meanwhile, both the Nasdaq Composite Index and S&P 400 Midcap Index experienced declines, continuing their weeks-long downward trend. In terms of market breadth, the S&P 500 showed strong gains with 306 weekly advances versus 186 declines. The Dow 30 had more advances than declines both on a weekly and monthly basis. Interestingly, the Russell 2000 index saw a significant 2% drop, despite a majority of stocks advancing over the same period. Examining returns, the S&P 500 had a modest weekly return of 0.34%. However, the Russell 2000 posted the largest negative weekly return of 2.08% among major indexes. The Midcap Index also declined sharply, with a 1.42% loss for the week. Long-term returns remain largely positive, with the Nasdaq Composite Index showcasing exceptional growth, boasting a 10-year annual rate of return of 27.19%. In contrast, the Dow 30 posted a more moderate 10-year return of 11.49%, indicative of steady but less spectacular growth.
Checking out best and worst performing equities, I'm Penny Stock. This week, Triller soared with an ending price of 0.17, enjoying a significant rise of 0.14 or 466.6%. Despite this impressive spike, it continues to be stuck in a very strong negative trend. This week, Adlai Nortye American Depositary shares closed at 10.63, gaining 8 and marking a 304.1% increase, leading with a strong positive trend. Adlai reached a new one-year higher close and has risen for 4 consecutive weeks. Turning to annual returns, Adlai Nortye outshines with a notable one-year return of 416.02%, while Triller unfortunately faced negative returns over 1 and 3 years. Linkers Industries also performed well with a new one-year higher close and continues in a strong positive trend. Among the big caps, Deckers Outdoor led with a weekly close price of $119.34, jumping 19.36 or 19.3%, breaking out upward after 3 days of sideways movement. Seagate Technology also showcased notable strength, climbing 61.59, setting a new all-time high. Continuing with the big caps, Seagate Technology has consistently closed up for 5 weeks, ending this one at 407.69. Meanwhile, Royal Caribbean Cruises maintains its positive momentum, advancing 13.4% this week, also showing strong upward volatility. Over a longer term, Deckers Outdoor marked an impressive 10-year annual rate of return at 30.62%, whereas Seagate Technology delivered strong 3-year and 10-year rates over 80% and 30%, respectively, underscoring their enduring performance. Looking at the losses, Quince Therapeutics stocks crashed to a closing price of 0.17, falling by 2.91 or 94.4%, setting a new all-time low. Dogness joined the downtrend, with a record low close at 1.5, a drop of 90.7%. Caixin Auto experienced a substantial decline, decreasing by 11.33 to 1.20, a 90.4% fall, breaking out of a lengthy 51-day consolidation. Similarly, Calcimimetica hit an all-time low at 0.90, showcasing a strong negative trend. In this week's performance, missing the mark significantly were key small-cap players. Quince Therapeutics plunged by 94.4% to close at 17 cents, experiencing a consecutive two-week slump with a new all-time lower close. This showcases a strong negative trend. Dogness International similarly dropped to a new all-time low at 1.5, down 90.7%. This stock exhibits strong downward volatility. Caixin Auto also hit an all-time low, closing at 1.20, notable for a sharp downturn following 51 days of stagnation. Mason Glory Limited ordinary shares closed sharply lower at 0.84 with notable downward volatility. Lastly, Calcimimetica closed 82.8% lower at 0.90, continuing its negative trajectory. Turning to big cap stocks, notable declines were recorded. Humana fell markedly, closing at 195.20, 26.7% lower, a third consecutive weekly drop, and marking a new one-year low. Axon Enterprise also struggled, dropping 21.1% to a close of 483.58, highlighting strong downward volatility. United Health recorded a close at 286.93, down 19.4%. This continued the negative trend with considerable volatility. Meanwhile, the trade desk saw a 17% fall, closing at 30.33 as it reached a new one-year low. Finally, Tyler Technologies closed at 369.40, down 15%, with a streak of 3 weeks of declining prices. The big caps faced significant losses this period. Humana saw declines reflected in a 26.7% one-week total return loss. Axon Enterprise followed suit, with a weekly drop of 21.1%, marking another one-year low. United Health experienced a considerably steep fall, down by 19.4% this week. The trade desk shows a 17% dip for the week, significantly impacting its one-year metrics. Tyler Technologies concluded 3 weeks of decline, closing down by 15%. Examining the long-term figures of struggling big caps, Humana has experienced a one-year total return loss of 34.3%. Axon Enterprise shows a shrink of 25.9% in the past year. United Health sees a drastic drop in its one-year returns of 47.4%. The trade desk reports a 74.5% decline for the same period, mirroring its one-year low. Lastly, Tyler Technologies illustrates a 38.3% downward shift over the past year.
And now on to U.S. sector performance. The communication services sector closed at 478.14, gaining 19.4. It's been on a tear, hitting a new all-time high with a strong positive trend and significant upward volatility. Meanwhile, the energy sector also marked new highs, closing at 786.13, up 29.35. Market breadth shows the energy sector leading with significantly more advances than declines both daily and weekly. The communication services sector also holds a positive trend, but with more weekly declines. The industrials saw the most advances at 500, outperforming in breadth. In terms of total returns, the communication services sector achieved a 4.15% weekly return, with positive daily momentum. The energy sector outperformed with a staggering 14.37% monthly return so far in January. It's been an exceptional period for these sectors. Examining annual returns, the communication services sector boasts an impressive 38.55% 3-year annualized return. In contrast, industrials achieved a 12.35% annualized return over 10 years, leading in long-term growth among its peer sectors.
This week, U.S. communication stocks like Verizon Communications saw a major gain, closing at 44.52, up 5, reflecting a 12.6% increase. The stock is seeing a very strong positive trend, closing up for 2 weeks consecutively. ATandT, meanwhile, also closed up to 26.21, with a 2.62 rise, although it hit a new one-year low closes during a period of mixed negative trend in the sector. Strong weekly returns were seen in Verizon Communications, with a total return over 1 week of 12.65%. ATandT also climbed with a 1-week total return of 11.1%. Despite the overall gains, Charter Communications remains volatile, showing a mixed negative trend with a 1-week return of 7.5%, but recorded new lows. The collective upward movement reflects strong bullish sentiment in a few of the communication stocks. Over the longer term, Meta Platforms stands out with a 3-year annual return of 694.46%, demonstrating strong long-term profitability. Charter Communications struggles with a considerable 1-year loss of 38.77%. Across 10 years, Verizon Communications shows consistent performance with a 3-year return, while T-Mobile US offers high potential with sustained growth in returns.
In the worst performing sectors, the healthcare sector ended the week at 1,802.61, down 31.65 points or 1.7%, with a mixed positive trend. The consumer cyclical sector also fell, closing at 1,961.13, down 28.26 points, but showing a very strong positive trend. In market breadth, the healthcare and basic materials sectors saw declines overall. Healthcare had 225 advances and 753 declines. Basic materials set a new all-time high close recently, with 38 advances against 168 declines this week. Looking at total and daily returns, the healthcare sector saw a 1-week total return of minus 1.73%, showing a mixed positive trend. Meanwhile, the basic materials sector achieved a new all-time high, despite a weekly return of minus 1.21%. Evaluating total and annual returns, the basic materials sector has shown strong performance over the long term, with a 10-year ARR of 9.81%. Meanwhile, the consumer cyclical sector boasts a remarkable 10-year ARR of 12.78%.
In the U.S. healthcare sector, Humana closed at 195.20, plunging by 71.30, a 26.7% drop. This marks a new 1-year low close with a very strong negative trend and pronounced downward volatility. United Health also experienced a significant decline, closing at 286.93, a decrease of 69.33, or 19.4%, maintaining a strong negative trend. Continuing with U.S. healthcare stocks, Molina Healthcare dropped 11% this week, closing at 179.59. Despite the weekly decline, its monthly return is slightly up at 3.49%. CVS Health fell 10.2% over the week to 74.52, yet it recorded a new 1-year high earlier. Moderna closed lower by 9.5% at 44.7, but had a positive monthly total return, up by 49.4%. Looking at longer-term performances in U.S. healthcare, Humana's 10-year annual return stands at a modest 1.83%. United Health shows a stronger long-term resilience with a 10-year annual return of 9.55%. Meanwhile, Molina Healthcare posts an impressive 12.57% over a decade, demonstrating a marked long-term growth.
Thanks for watching. I'm Max Profit, along with my AI co-host Penny Stock. Please like, subscribe, comment, share, Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.